Hey, what's going on YouTube? It is Lance OA, and today I wanted to do a little something different than my usual channel stuff. I am invested in stocks and mutual funds for my retirement, so I just kind of wanted to share what I have in my portfolio, um, share ideas with you guys, learn a little bit from the community as a whole. I know a lot of you guys aren't fully vested in silver and gold. You guys have other interests, other retirement strategies. I'm here to share ideas and learn. So with that, let me share a piece of myself, and maybe I will teach you something, or maybe you will show me how I'm doing it totally wrong. So some of this information will be blurred out, and that's just to protect me. But other stuff I do want to share with you, and we'll go starting really with rate of return here. 20.41% for my last year, for the total year, and year to date is 18%. I'm really liking that number, and I'm hoping, with a little luck, I can continue on that path. Really, I really started going hard with my retirement accounts in the last few years. Um, Basically, I don't want to pay the Uncle Sam my dividends, my hard-earned money. So the point is to put a lot of it pre-tax into my retirement account. I just wanted to share with you real quick a couple of picks I have lately and what I'm invested in, just a couple of the standouts. And hey, if it speaks to you at all, click the thumbs up. If you want to share with me what you're choosing, I'm primarily invested in Fidelity, and Fidelity has over, I'm not sure how many $1 trillion invested, but they're one of the big houses. I know Vanguard is another big one. And so primarily I look for the Fidelity picks, which is ones they promote, and then um, usually they have no transaction fees and no load fees and things like that. So it's a cost-effective way to get something, and they have comparables in every single you know brokerage firm. So whether or not it's Fidelity or Vanguard, there's something for everyone. All right. Okay, so here is what I currently hold in my account, and as I said, I've been going for the last few years. So about 2014 is when I really kind of realigned my account a little bit and started learning a little bit more, just enough to make me dangerous or get myself into trouble. So my largest one that I'm really going after right now is this FID OTC K, and we'll click on it. And this is Fidelity OTC Portfolio Class K mutual fund, and it's a large growth. Some of the top holdings are Alphabet, Apple, Amazon, Facebook, Nvidia, some of the FANG stocks, Activision. That comprises 45% of the portfolio. So that's quite large. Low expense ratio, not crazy low, but low enough for me. It's under one, so that's good. And when the returns for the look at the 1 year return, 30%. I really can't. It's hard to deny how good this thing is doing. And while it's this good, I'm gonna get it. I have to get it. So I can ignore an expense ratio that's a little bit higher than some of the index funds that you might find. So 5 year track record is really good, and of course the 10 year. I mean, we're on a huge bull run right now. I think it's going for about 10 plus years. So um, yeah, that's the number one. And let's kind of see what else I'm looking at. Okay, and I'm also doing a little bit in like, let's see, Fidelity 500 index. Go ahead on that real quick. Uh, Index fund, institutional class. This is a large blend. Really cool holdings. Apple, Microsoft, of course, Amazon, Facebook. You got Johnson and Johnson. It's just a really long time legacy company. You got some banking, JP Morgan. You got some Berkshire. You got some Google in there. So really good fund, and expense ratio is just ultra low. Look at that, 0.03. So your returns are, really standing up and not getting chopped down by that expense ratio. 1 year in the past year, 16%. 5 years, 14%, and the 10 years, basically market average, almost 8%, holding up for the 500. Contrafund. Really like the Contrafund. Expense ratio just over 0.5%. In the last year, it's done 22.8%, and some of the same similar holdings. Facebook, Berkshire. I don't see Facebook going away. Microsoft's in here, Visa, Wells Fargo, which has had some turmoil lately. I don't see the electronics segment going away. It's just too strong. We're all too heavily vested in this. When do you not log on? I mean, if you're not carrying a smartphone, I'm surprised. But if you're not on a computer also, well, you wouldn't be watching this video. But everything's tied in, and we can't get away from technology now. I mean, they're requiring it in schools. I mean, kindergartners and first graders, they're all getting on the computer nowadays. So I'm just all about the hardware, the software, every technology behind it. I'm championing for a while now. And these are all my long-term holdings. I'm going to change the percentages as they do good and bad, and kind of rebalance every 6 months to a year. I'm going to keep on looking at this, and when the market slows down quite a bit, it's, the bull run has to end. What I'm going to do is I'm just going to buy. If they told you your dream car was on sale for 30, 40, 50% off, would you be sad about it, or would you be happy about it? So right now, I do have about 20 years to go with my retirement account. So with that being said, right now, strike while the iron's hot and get those stocks in there working for me, making some money. So as far as my review and my returns, 18% for the year. I think that's fantastic, and I'd be happy to get that all my whole saving career. So we're just going to keep on trying, and if I could learn something from you guys, please do comment below if you learned something from me, or if you think I'm a dummy, go ahead and put it in the comments below. I'm just sharing to learn. Thanks. This is Lance Oy. See ya.